Hi everyone, welcome back to the Property Finance Podcast. So continuing our frequently asked questions series, we're today going to be talking about what to expect on a Development Finance AIP. So if you're looking at getting into development finance, this is kind of what you can expect on that initial agreement in principle that comes over. So as we've mentioned on the one for Bridging Finance and for Refurb Finance, obviously you're looking at getting kind of a 1-2 page document. They'll normally break down all the details of the project at the top of the agreement in principle. And then what they'll do is they'll get into the nitty gritty of the details and the numbers. So on this example here, what we've got is they've listed out the current market value, so what it's worth as it sits right now, the cost of the works and the GDV. They've then put down the loan term, and based on those numbers, they've got an entry loan to value, which is essentially how much you're borrowing against the day one, and then they've got an exit loan to GDV, which is how much you're borrowing against the GDV. So on this example, borrowing 70% against the initial purchase and 65% of the GDV. What they then do is they then detail down what you're borrowing on the day one. So, for example, here you've got a gross day one drawdown. So that's that 70% of that purchase that we mentioned earlier. They then got the retained interest. So that's how much interest they retain just based on that gross day one drawdown. They've then got the arrangement fee and the procurement fee. Procurement fee is another way of describing a broker fee. So that arrangement fee and procurement fee come off of that gross day one drawdown. They've then got their legal fees, their initial IMS fees. So some lenders call it an IMS, some lenders call it a QS. So IMS is independent monitoring surveyor, and then QS is quantity surveyor. So those fees will come off. And then what that does is then that gives a net day one drawdown. So for example, on this one, the gross day one drawdown was 400,000. The retained interest was 78,000. The arrangement fee was 18,000. Procurement fee was 9,000. Legal fees were 4,500. Initial IMS fees were 2,500. So that then gave a net day one drawdown of just under 300,000. So it's about 100 grand's worth of fees, etc., over those 18 months. What they then do is once they've broken down all the fees of that initial tranche that they give you towards the purchase, they obviously then start to break down the numbers for the bill costs. So on this one, you've got a gross loan facility of 935,000. So they then base their arrangement fees and procurement fees off of that. So that's actually your gross day one drawdown plus your bill costs. So they go through the breakdown of what the numbers are based on your day one. So that chunk towards the purchase, but then they combine everything into their sort of middle bit that they work out. So you've then got all of the fees, etc., based on the full amount. And then what they do is they then tell you what the monthly interest is going to be, what the total retained interest is going to be, and then they work out the net loan facility. So in this case, the net loan facility was 750,000. Obviously, we know 300,000 of that is going towards the purchase. That left £450,000 as a post day one net facility. So essentially another way of describing what you've got towards the development costs. And that's all then broken down so you understand how you've got to that 450. They then will let you know if there's any exit fees, and then obviously the last figure they give you is the total to pay back. So the two net facilities here were 461 and 297, plus all the interest fees, etc., would then give a total payback of 940,000. So they've broken all of that down, every single number, in quite a bit of detail. These are significantly more detailed than a bridging AIP, but that breakdown allows you to see fairly quickly where all the money is going, because it's very scary just to see, oh, I've got to pay back 950,000, but then I'm actually only getting 760,000. Where's the rest of it going? That's where all of these breakdowns are very important, because it gives you a total figure for every single thing. So total interest, if you took it for the full 18 months and you drew it down as they expected, it's about £150,000 worth of interest. So it's quite a significant number, but it's helpful to see it all broken down. So hopefully that's helpful for anyone who's looking at getting into development finance. It's quite a substantial AIP to break down. Obviously, if anyone wants to talk about any of these AIP breakdowns in more detail, please feel free to reach out. Obviously, we can't share specific AIPs for other clients' projects, but I'm more than happy to kind of share these templates that I've spoken about. But obviously, we put everything into a spreadsheet when you come to us for finance anyway. So yeah, more than happy to kind of share any further information if that helps. But otherwise, thank you very much for listening. Catch you on the next one.